Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that's what you're here for, you're definitely in the right place at the right time. Now, I do want to welcome all of my new and returning subscribers and thank you guys for all of the love and engagement that you've been showing the channel because I would not be growing if it was not for you guys. You guys would not be profitable if you were not tapping in and really taking your education seriously. So I'm happy to be on this journey with you, and I look forward to continuing to make quick and easy videos that really help. I love when you guys share me your results and connect with me on Instagram and TradingView. It's just really amazing. But in today's quick video, we're going to be talking about a really cool trading strategy that can help you with your entry points. Now, a lot of people still struggle with entry points. That's one of the questions, that's one of the things I get asked about the most. And I really just want to simplify it, but this type of strategy is going to, it just takes patience. You don't even need any indicators. You really just need patience. And this is called the break of structure trading strategy. It's pretty simple. It lets you know when you should get into your trades. And I'll also give you some guys on some tips, give you guys some tips on when to exit as well. Now, if you've ever looked at any chart, you'll notice that it's always doing something like this. It's going up, then it's going down, then it's going up, then it's going down, then it's going up, down, and so on and so forth. And because the foreign exchange market is a fractal market, meaning you'll find similar patterns on every time frame, you're always going to notice that it's buying and selling. It's never just going one way consistently without some type of retest or pullback. And this is called market structure. So if we were to look at the market for a certain period of time, right? Let's just highlight this area. What we'll notice is that within the structure, the market is selling at a place, and then it's coming down and buying at a place, and then it's going down. And as we see, the market is actually buying in this same area, right? It's bought in this area multiple times. It's sold in this area multiple times. It's sold in this area multiple times. It bought in this area multiple times. So when you see this type of market structure, what you want to do is you want to wait for a break of structure, either on the upside for a buy or a downside for a sell. So we can see in this case, the market broke structure on the upside, and then we see all of this beautiful buying motion. Now, let me just go ahead and put the chart in replay mode, right? I'm going to highlight our structure, right? Because we can see that the market was within the structure. If you guys can see that, just go ahead and drop a 7 down below in the comment box so I know that you're following, right? So if we were within this, we would have to see if the market was either going to break structure above, right, outside of this box, or if it was going to break structure below, right? And if it breaks structure below, you would want to target previous lows, right, as your TP. So maybe that would be a particular TP. But if it was to break structure above, you would just want to target these previous highs, right? Because if a market is buying, and I say this in a lot of videos, like let's look at this section. If a market is buying, you'll notice that it'll have a high, then it'll create a higher high. Then it will create a higher high. Then it will create a higher high. So we know that if we're buying, we just want to target previous highs because as we've just seen, the market tends to repeat itself. So let's just go ahead and hit play and see what happens when the market breaks structure on the upside or the downside. And this is the 4 hour time frame, but this can be done on any time frame. So cool. We see the market actually broke structure on the upside. It hit TP1. And then let's see if it's actually going to go up and hit TP2. And it did, right? And we didn't even use any indicators. Even a beginner could do this. All we did was wait for a break of structure, either on the upside or on the downside. Now, that was pretty simple and it made sense. Just go ahead again and drop a 7 down for me below in the description box so I can know that you guys are following along and that it's making sense. Now, this works no matter whether the market is buying or selling. And again, it does work on other time frames. So let's put this on a 15-minute time frame and let's go here. So we're going to do the same thing. We're going to come over to our toolbox. All of these tools are free. We're going to select the rectangle tool, and then we're just going to highlight an area that we see is consolidating or moving sideways, right? You want the top of your box to be at the highest point that you can see, and you want the bottom of your box to be at the lowest point where you can see. Now, all we're going to do is wait to see if the market pushes outside of the red box or if it pushes outside of the red box below or outside of the red box above to see if we should take this trade for a buy or for a sell. Again, you can use your free tools over here. Let's get a horizontal line. We're going to use that as our potential take profit for a sell. And we're going to use a previous high as our potential for a buy. Now, if you are going to be using this breakup structure method and you do want to use this rectangle, what you can also do is set an additional horizontal line at the top of the box. And you can use this number, 1.30611, in this example as your entry point, right? Because if it's a pending order, you know that once the market hits that point, most likely it'll continue to buy up until your TP1. And the same thing for a sell. You can set the bottom of the box as your sell limit, and you can set the second line as your take profit. And you would want to enter on the candle after the market break structure. Let's see what happens. We see the market comes down. We see the market actually broke structure on the upside. So if this was a pending order, our trade would have been triggered, right? Then we just go ahead and see what happens. The market continued to push up, and let's see if it actually makes it to TP1, which is that second black line, and it did. And all we had to do was wait for the market to break structure and enter on the very next candle. So I really hope that this video was helpful. If you guys learned something, just go ahead and drop a 7 in the chat. If you guys want more videos like this, make sure you check out all of my playlists because they are pretty organized. I have videos on candlesticks, indicators, strategies, entry points, and pretty much anything that you could think of that you would need to be an independent and profitable trader. So if you guys are looking for personal mentorship or you want more help outside of what is offered on YouTube, I do have the information down below in my description box. Just go ahead and reach out to me and I would love to help you. But that's really all I have for you guys today. Until next time, rich friends.